G'day guys and welcome to the weekly VEMA Trader Market Scan. My name is Rhys and today I'll be running you through my thoughts on Bitcoin. So if you're wondering what Bitcoin might be doing at the moment, where it could potentially be heading, and you just sort of want a second opinion, then this is a great video for you. So what we'll do is first we'll take a look at the trades that we set up last week. We'll go and see how they played out, if there's anything we can learn from them, did we win or lose, which is always the most exciting part in my opinion, and then we'll go and take a look at Bitcoin as it stands today. So we'll take a look at the market, see if there's any trades we'd like to look at, see if there's anything that we think might be coming up over the next week or the next couple of weeks, and go from there. So what we'll do is we'll head to VEMA Trader and we'll get started. Righto, so last week we spoke about two trades. We set up two trades. We spoke about another half trade, as I called it, that was a long that I was potentially looking at setting up depending on what happened in the market throughout the week. I did end up setting up that long, so we'll start there. Unfortunately, it ended up losing. I'm still quite happy with the setup at the time. So what that was, it was the long from Bravo. So I created this trade here, the long from Bravo, once we broke up above there. As I spoke about, I think when we recorded the video, it was say back around the 2nd of May. So we're back in here and I was worried about it breaking out and then rejecting off the top of that descending wedge. We ended up getting a really nice solid breakout. So I was like, all right, that's what I wanted to see. Quite happy to set up the long there. We had that 4-hour demand zone, the 4-hour EQ, the sort of 50 fib, the 38 fib. So I was like, all right, that's a pretty good area. And then Bitcoin absolutely smashed it. So that's cool. Whenever we're going long, and our high time frame bias is short, I drop the account risk because that's how I like to do things. So, we lost 0.5%. Not ideal. It's always better to win, but hey, quite a small loss. And at the end of the day, that's a trade that I really did like the look of. So in terms of tags, I don't really have a whole lot to add here. Potentially it was a bull trap, some sort of a fake out, but those things aren't, I don't like those terms. I see them used all the time. Often people just use them anytime they got stopped out. So, that they are probably legitimate terms and there's probably legitimate cases for using them. But in my opinion here, I like to look at this setup. I got stopped out. There's really nothing that I really take away from it. I think, if I had this trade 100 times, I'd probably set it up 100 times. If those 100 times this kept happening, then eventually I'd learn something from it. But yeah, for now, nothing to really add here to my tags. All right, so here we go with one of the trades that we did actually set up on the video last week, and that was the short from Alpha. So what we were looking at was this supply zone, this 4-hour EQ, and we were hoping price would come up there and then reject and head down to that demand zone. You can see that it did head to the demand zone really nicely. That was quite well respected. So that was potentially a really good TP. Now that's an important thing, right? Even though this trade didn't enter, doesn't mean there's nothing we can learn from it. We can see that our TP was a good one, but we can also see price continued beyond TP. Now that's a tag that I have because if I consistently see price is heading past my targets, I can start shooting for bigger targets and higher risk rewards. So even though this trade didn't enter, that's a valuable lesson from this trade. My take profit was good, it was respected, but price then continued beyond it. The other key takeaway for me is to do with what you'll often hear me talk about, dual zones or two zones sort of together. So I spoke about this supply zone on the video last week, and I said that I wasn't really interested in looking for shorts from there for a few reasons, and one of them is that dual zones like that, where you have two zones nested together, often tend to head to the further zone. So if you're looking at supply zones and you're looking for shorts, they'll often head to the higher zone. If you're looking at longs from a demand zone, they'll often head to the lower zone. So I only targeted the higher zone for that entry because I really wanted to get a huge risk to reward, and price rejected off that first zone. Now, I'm cool with that. I'm quite happy with the trade that we set up last week, but I can learn something from that. So I can now tag dual zone first held, right? Because I might see that even if price is often hunting the second, I can eventually make a setup off the first, especially when we're talking staggered entries and exits, right? I might stagger in off the first and then have the second set up. Hopefully that's not too far off. So those are all worthwhile tags to have. There's definitely still something I can learn from this trade, even though we didn't get an entry. And finally, we come to the last two trades. Now, I'll do these together because they were very similar trades. So the trade that we set up on the video last week was the short from Charlie. So what we're looking for there was the candle close below Charlie. We were targeting about 35,000, sorry, about that level. Now, that trade actually played out really nicely. Unfortunately, because we had this minimum risk reward set to 2-to-1, that did not enter because at the time of entry with that candle close, it was about a 1.8-to-1, I think. So VEMA didn't take that trade. Now, I said unfortunately, that's not necessarily unfortunate, right? Yeah, in this case, it would have been a win, but we don't want to be taking risk rewards less than our minimum risk reward. So that's cool. VEMA looked out for us there. We didn't get into that trade. luckily, what we did at the time, or midweek actually, so for anyone who isn't in our Discord, it's definitely somewhere worth being. So this trade from Delta is one that I didn't set up on the video last week, but like the long from Bravo, what I did was I posted it in the Discord in the Share Your Setups channel, so there'll be a link to the Discord in the description below. What this Delta trade was a strategy that I call the backup no candle close strategy. So when price was around here, you can see where I created this trade. The fact it was consolidating on this zone, I was feeling quite bearish on this, and I had a feeling that if we broke that zone, it would potentially be a pretty quick move down to that 35,000 level. So the backup no candle close strategy is essentially a way to protect yourself, maybe, or just give yourself another opportunity to get into these trades. So what it does is, I had the candle close short set up from Charlie, but because I thought this move might be quite rapid, picture like a move like this, but taking place down here. If I had the candle close set up on Charlie, that's not going to get the close until potentially down here, and so I'm not going to get into that trade. So what I'll do sometimes is set up this backup trade, which is what I did with Delta, that does not have candle close set, so that way if it's a big move and it tanks through, I'll get into the trade at Delta. If it's a move that just closes below, where I want to see that close below, but it doesn't tank straight away, I'll get a better entry with, like the short from Charlie in this case. So we set this trade up, it played out beautifully. Got a good entry, got a good exit, so can walk away with a cheeky 2.2321, and because it was with my bearish bias, right, my high time frame bias was bearish, then we went for the full 1% account risk. So even though we lost 0.5% on the other trade, we actually had quite a good week, and you can see the overall sum is looking quite good. So what we'll do now, we'll take a look at Bitcoin as it stands today, and we'll see if we can keep increasing that number. Righto, so here we are. As always, we'll like to start on the weekly. Now, last week was a huge bearish engulfing, right? That is a very, very bearish weekly candle. You can see there was technically a weekly supply zone here, demand zone, sorry, that I've spoken about a couple of times. But because it was such a weak bounce, I haven't really been focusing on that zone. That zone is now almost completely eaten, right? As of today, we have nearly eaten the entire zone. So, again, for a zone that I didn't have much faith in before, I certainly have essentially none now. Now, you'll see that I've also marked the 20k level. The reason I put that on there is now that we're starting to, eat into the current weekly zone, so about 34 to 29, so that's a pretty big zone, right? $5,000 zone. But the fact we're starting to eat into that, it's worth considering, okay, what comes next? If we go through the zone, where might we be heading? And in my opinion, 20k, right? I'm not saying we're going there, but I'm saying it's definitely a level that you want to keep an eye on. Previous top in 2017, there's currently two, like I spoke about before, right? Dual demand zones. They are pause zones, which is the weaker of the two between pivot and pause, right? Because the market continued up, paused, continued up. So not the zones I put the most faith in, but on the weeklies, that is where I am looking, right? If we break this current zone, which is a big if, but if we do, 20k is my next weekly zone. It's always worth having an idea of, if this happens, where could we be heading? So that's what I'm seeing on the weekly. We'll head to the daily. All right, so on the dailies, things don't look good. I've been talking about this about 30,000. I call it like just the 30k zone because it's in that region, but it maxes out about, let's call that 31k and bottoms out about 29. So about a $2,000 zone. I've been talking about that for weeks, if not months, because I don't know when exactly I started speaking about it, but I have been talking about it for quite some time. Looking at Bitcoin right now, I am reasonably confident we're going there. I'm not saying it's guaranteed, but just based on the way the market's looking at the moment, I am sort of expecting to see that level be hit at some point. It might not be this week, but in the coming month or two, I would be looking at that level. So what sort of gives me confidence in that is the fact that we have essentially eaten most of what was the previous daily zone. Now, this wasn't a daily zone that I loved because even though we had a retest and it did lead to a change in market structure, it was a very weak high compared to that high, and it was the start of a bear flag. It's not like it was like a reversal pattern. It was the start of a more bearish pattern. We've now eaten most of that level. So the fact that that's basically gone sort of makes me think that we are heading to that sort of 30k level. Now, to the upside, we do have two supply zones. Now, the one that I really like is this one up at about 42,000. The reason for that is it's a pivot zone. So, price Price consolidated, came back up. It was a very weak retracement, but then it pivoted back down. There's also that daily EQ, so that also interests me about that area. And I think I spoke about last week, potentially looking for a retest of the bear flag. Now, that could still happen. It's probably a little bit less likely now that we have moved away, but to see something like that, that'd be pretty rapid buyback. But to see, a retest of that area would not surprise me to see just at the moment. So something that I'm considering now. The other reason I really like that zone, the 42k zone, is it's sort of the origin of the break of this market structure. So we had a higher low form here. Price came up, came back down, and it held sort of consistently through there and then through there, but then it really collapsed. And that zone there was the origin of that selling move, essentially, right? You can draw a straight line like that from that zone. This second zone here is it's really the final push. It's the zone that really pushed us to break that level, but it's more of a poor zone. So I'm sort of less confident in it. I still think it's definitely a valid zone, but it's more of a poor zone. And it's also very wide. So I'll leave it on there for now. Something like that, especially with how bearish the market is at the moment, actually. Something like that's probably, it's definitely not out of the question because anything can happen, but probably not the most ridiculous thing. One thing I want to caution you against here is the old gambler's fallacy of things being due, right? I am a big fan of, hey, this has been coming down for a long time. It's probably due for retracement, and it's absolutely due for retracement. It can be due, but that's like seeing 5 reds on a roulette table and going, oh, black's got a higher probability next because it's due, right? It's due to come up. That's a fallacy. It is still 50-50 or less on the roulette table because you've got the zeros, but for the sake of simple maths, it's still 50-50 between red and black. And just because this thing is due for a correction doesn't mean that there's a correction coming, right? The market can remain irrational longer than you can remain solvent is one of my favorite quotes in trading. May not apply exactly here, but it's that kind of idea, right? Just because something should be happening doesn't mean it's going to happen. And really, there's nothing stopping us from heading straight down here. So overall on the dailies, there's really nothing that I like, okay? Even though I think price is most likely heading down to here, I don't want to be shorting this. I don't want to short a huge move down because at some point that retracement's coming, and the further we go down, the more likely that retracement becomes. Not really, probably that gambler's fallacy, old habits die hard, but I don't really want to be shorting I don't like shorting lower lows. I like shorting lower highs. Lower highs. So at the moment, on the daily, there's really nothing I like to look at. I'm sort of just expecting a move one way or the other. So, as everyone likes to say, could go up, could go down. And finally, we come to the 4 hour. Now, I'm just going to start this off by saying that to me, the 4 hour currently is ugly. You may have heard me say that before. I have done it before. What I mean by that is not necessarily that the market's not making sense, because it still kind of is making sense. I'm really expecting moves to the downside and we're getting those, but it's not moving in a way that is conducive to my trade plan, right? So even if it's doing things that don't necessarily surprise me, I can't trade them because there's just no entries for me, even if I am thinking things might be going to happen. That probably didn't make any sense, but I'm going to run with it. So what I mean by that is price is really just tanking, right? I like to see the market going up and down, or even sideways, or down and up. At the moment, it's just down. There's no up. It's just down. So there's not really any zones that I can target for entries. I have marked off these two. I'll talk about them in a sec. But yeah, for me, market's ugly. I am not setting up any trades this week. If that changes midweek, I'll post in the Discord, so make sure you're in the Discord. But, as of this video, there's really nothing I'm seeing. So, in terms of what do I think price might do, look, I've said quite a few times that consolidation above support is bearish, and we did consolidate above that 35k level, right? That one we used to target last week. We consolidated there, which to me was a bad sign. Then we got this bullish engulfing, which was overnight. So that was kind of a good sign, but also the fact that it ate quite a lot of that zone is not ideal. And then we closed it with a bearish engulfing to finish the week. So to me, that was pretty bearish. And also the fact that there was a pretty strong 4-hour EQ, and we closed below that. And now, as of the current candle, we've eaten 3/4 of that demand zone. To me, the downside is feeling more and more likely. Now, that doesn't mean we're not going to head back up and test some of that levels. Doesn't mean we're not going to head back up and start to go bullish and test 50k. But it's all just a game of probabilities. And to me, the high probability at the moment is still heading down here. If there is a trade that I like the look of midweek, it's potentially going to be a short from these two supply zones, but I'm not game to set that up right now. One, because they're both pause zones. They didn't really pivot. The market just came down, consolidated for a bit, and then kept coming down. So that kind of makes them weaker zones, in my opinion. And also the fact that I can't even draw fibs on, because I'm a huge fan of fibs, but right now I don't know where the bottom of this move is, right? I need this move to actually start retracing before I can draw fibs in. And this current candle is the low point, but that doesn't mean we're not going to close even lower by the time we close, and it doesn't mean the next candle is not going to go even lower. So I can't even put my fibs on at the moment to get an idea of where they're going to lie during the week. So at the moment, they do line up quite nicely with those zones. You can see the 50 fib lines up with the top zone, and the 38 lines up beautifully with the bottom of that lower zone. But for me, there's really just nothing that I like the look of in terms of trades this week. So there you have it. Look, if I'm being honest, which I always am, so it's kind of a dumb thing to say, but I don't like the weeks that I don't have trades to show you guys, because I kind of feel like you're going to watch this video, it's going to be like 15, 16 minutes, and you'll be like, okay, that was pointless, there's no trade setups for this week. But in all seriousness, not taking trades is probably the more important part of trading to some extent, right? A lot of beginners will force trades, will... one of the things I used to do was I'd chart for half an hour, and then if I couldn't find a trade, I was like, that's a waste of time, and so I just put on a trade, so I felt like I'd done something. You're going to lose those trades 9 times out of 10, right? And you're probably not going to have a 10, 11 to 1 risk to reward to actually be making money losing those kind of trades. Knowing when not to trade, whether that's because the market doesn't suit you, whether that's because you are not in a position to trade mentally, maybe even financially, right? There's going to be different times that there's reasons you should not be trading. It is probably the most important skill that I've mastered when it comes to trading, is knowing when not to trade. It's probably saved me more than what I've made in the markets has ever made me, if you had those profit and losses against each other. So, yeah, even though I always do feel a little bit deflated, a little bit disappointed when I don't find any trades to set up for the week, it's really, really important to recognise that and to know it's still better to not place trades, than to just force trades. So hopefully you guys learned something from this video, whether it's that, whether it's some of the things I spoke about earlier, whether it's the tags that I used on these setups from last week, whatever it is. I really hope you guys got something out of this video. Let me know what you think Bitcoin's going to do, right? Where do you think it's going to head over the next week? Drop it as a comment. Throw your charts in. You can share your charts, throw them in. If you've had any wins or losses recently, chuck them in. I'd love to see them. But, most of all, have a great day. Happy trading. Hopefully you guys have a ripper week, and I'll talk to you very soon.